Student loans are crucial because they provide a way for people to pursue higher education. Since you're not Elon Musk or Bill Gates, you might find higher studies quite expensive, especially abroad. Student loans give parents the breathing room they need to get back on their feet while still paying for studies and other essentials. They enable you to pay for the higher education that you need and deserve while allowing some money to go toward other needs. Being able to pay them back will raise your credit score and increase your appeal as a potential borrower for future loans, hence more higher studies and so on. Jokes apart, to get a suitable loan, you need to have a sound understanding of loan structures in various countries. That's why we're here to tell you in this video anything and everything you need to know about student loan forgiveness. Stick around till the end. Let's start with student loan forgiveness. When a borrower receives student loan forgiveness, they're not required to return the debt in full or in part. These borrowers have loans to pay for their post-secondary education costs. Some debts may be forgiven, but only those who are employed in the military, in education, or in government service may be eligible. Isn't it cool? So how does the forgiveness of student loans operate? Student loan forgiveness for all borrowers, not just those who were taken advantage of by their education, is a strongly debated political issue. 92% of the nation's total student loans are comprised of these loans. Although theoretically any student loan could be forgiven, student loan forgiveness typically only applies to loans issued or backed by the United States government. The well-known forgiveness programs do not apply to any privately issued loans, such as those from a commercial bank or lenders like Sallie Mae, even if they are earmarked for students. In some cases, borrowers may be able to have their loans canceled or forgiven. Unless you're a billionaire, loan forgiveness requests must be submitted, and applicants may need to continue making payments until the request is granted. Although many borrowers would adore being rid of their student debt, few actually get the chance to do so because of the stringent eligibility standards. Depending on the loan type, the requirements change, but the majority only offer forgiveness to those who hold particular jobs in the public sector. You know, good things take time and effort. Student loan forgiveness also comes in different categories. First, we have Public Service Loans Forgiveness, or PSLF. For those who work in public service, there's a loan forgiveness program called the Public Service Loan Forgiveness Program. Prior to being eligible for debt forgiveness through the Public Service Program, you must first make 120 qualifying payments. You might also be able to get some or all your loans forgiven by carrying out specific voluntary activities, volunteering in the military, or working as a doctor. So plan your steps carefully to get all your loan amount forgiven. In 2021, there was a PSLF redesign. PSLF borrowers were given credit for prior payments made on loans that would not have otherwise qualified for PSLF. Even if they were later not, on the whole, more payments qualified. Payments made under any repayment plan, not simply income-based ones, were taken into account. By the deadline of October 31, 2022, borrowers were required to have direct loans or submit an application to consolidate them into direct loans. So who was qualified? Primarily military personnel, federal employees, and other carefully chosen public service groups received automatic PSLF credit. Borrowers with FFEL, Perkins, or other indirect loans were eligible for this restricted waiver. Parent Plus loans were not qualified for the restricted waivers provisions. So how do you request forgiveness? Both you and your employer must complete and submit the Public Service Loan Forgiveness and Temporary Expanded PSLF certification and application to be eligible for PSLF. To have benefited from the temporary waivers, you would have had to combine your FFEL program debts and Perkins loans into a direct consolidation loan by the date of October 31, 2022. After that date, you won't be given credit for payments made during the short-term period if you consolidated your debts. You see, asking for forgiveness never seems easy, be it relationships or loans. Timing is important. Next, we have the plans for loan forgiveness and repayment. It could still be possible to get some of your school debt forgiven even if you don't work in public service, but it'll take a little more time. Federal income-driven repayment plans offer some debt forgiveness after a specific period and are intended to assist graduates who would struggle to make payments during the usual 10-year time frame. These plans consist of income-based repayment, or IBR. Payments won't exceed 10% to 15% of discretionary income per month. 20 or 25 years of qualified payments are necessary for eligibility for forgiveness. Income conditional repayment, or ICR, where payments which are typically 20% of discretionary income are recalculated annually depending on gross income, family size, and the outstanding balance of federal loans. 25 years of qualified payments are necessary for eligibility for forgiveness. Lastly, we have revisions to pay-as-you-earn and pay-as-you-earn. 10% of income will be the maximum monthly payment. 20 years of qualified payments are necessary for eligibility for forgiveness. Even a portion of the loan's interest may be covered by the government. You heard that, rebels. The government isn't all that bad. Furthermore, if you work for the government, your employer may make up to $60,000 debt repayment through the Federal Student Loan Repayment Program, with a maximum annual payment of $10,000. Work with a servicer to enroll in a repayment plan or modify your current one, since they're responsible for managing the repayment of your federal student loans. Usually, you can get this via the service provider's website. Now here are programs for the forgiveness of special loans. You might be eligible for other programs that'll eliminate or reduce your student debt if you work for or volunteer for particular organizations. Here are a few instances. The Siegel AmeriCorps education amount can be used by volunteers for the AmeriCorps Vista, AmeriCorps NCCC, or AmeriCorps state and national programs to pay back eligible student loans up to the maximum Pell Grant award. Next, we have the Army National Guard. You may be eligible to receive up to $50,000 in loan repayment under the Army National Guard's Student Loan Repayment Program. Federal Direct, Perkins, and Stafford loans are examples of covered loans. Teachers who work full-time at educational institutions serving low-income communities. After 5 years of continuous employment, teachers may be eligible for forgiveness of up to $5,000 or $17,500 on their Federal Direct and Stafford loans through the Teacher Loan Forgiveness Program. Certain math, science, and special education instructors will receive a higher salary. Graduates of medical and nursing schools may be eligible for student loan forgiveness under various state programs if they work in underprivileged areas. So here's the American student debt situation at present. College costs have increased by more than 500% since 1985. Inflation alert, but we won't talk about it here. The amount of student debt in the United States is higher than ever before. There are already $1.5 trillion in student debt owed by American college students, and that number is just growing. The United States, which was formerly the world leader in producing college graduates with a 4-year degree, is currently ranked 12th, lower than even Russia. Accessibility and affordability are a few factors contributing to this education. College expenses have risen significantly more than inflation. For example, a $20,000 education from 1985 would cost over $100,000 now. Only those who can afford such high tuition fees can attend college without accruing a significant debt burden, such as Bill Gates' daughter. The remainder of us either borrow money to pay for college or decide not to attend. Currently, there are 44 million borrowers who owe $1.5 trillion in student loan debt. Roughly 7 million of these borrowers are in default, and the number of millennials who are drowning in debt is epidemic. The massive rise in student loan debt at a time when wages have been stagnating for more than 40 years makes it extremely difficult for people to participate in even the most basic life milestones. But you have good news though. President Biden introduced a new student loan forgiveness program recently. Such a savior. But what would you get in the student loan debt relief plan of the Biden administration? So first, we have the student loan repayment suspension's final extension. The Biden-Harris administration has repeatedly extended the student loan repayment moratorium due to the economic difficulties brought on by the pandemic. As a result, since President Biden took office, no one with a federally held debt has been required to make any loan payments. The Biden-Harris administration will prolong the suspension one more time through December 31, 2022, with payments beginning in January 2023 to ensure a smooth transition to repayment and avoid unneeded defaults. Next, we have giving low and middle-income families specific debt relief. Pell Grants recipients will get up to $20,000 in debt reduction from the U.S. Department of Education. Certain eligibility requirements for the public service loan forgiveness programs were temporarily waived. The transitional modifications ended on October 31, 2022. If a borrower's household income is below $250,000 or their income is less than $125,000, they're eligible for this relief. Lastly, make it easier for present and future borrowers to navigate the student loan system. The U.S. Department of Education has long offered income-based repayment options. However, a new income-driven repayment plan that'll significantly lower future monthly payments for debtors with lower and moderate incomes is being proposed by the Biden-Harris administration. The Biden-Harris administration is attempting to enact changes to student loans as soon as possible. None of the borrowers who make less than 225% of the federal poverty line will be required to make a monthly payment. Well, that sounds great, and don't you say no. If you're still not satisfied, let me show you schemes of other countries. Let's look at college prices. Despite not being the only nation to produce college graduates with student loan debt, the United States tops the list in terms of total student debt. This is primarily because American institutions must continually raise tuition prices to meet costs. In some other nations, tuition is either completely free or capped at a set amount. In Canada, the National Student Loan Repayment Assistance Program, a government initiative, pays off the remaining balance of student loans after 15 years. Keep in mind that the majority of loan repayment programs in the United States are only 15 years long, or nearly halfway through. Canada additionally offers student debt relief initiatives that might drastically lower debt loads. England is one of the nations that have set limits on the annual tuition that universities can charge. The ceiling amounts to almost £9,000 or $14,000. Even then, although not quite at the same rate as in the United States, student loan debt is increasing in England. See? Told you the US is better. The average college fee in England is set at the maximum amount permitted, which contributes to the nation's rising student loan debt levels. Now let's look at Sweden. Despite receiving free education, Swedish students still have debt. The majority of the debt acquired by Swedish students is usually for room and board, but even so, Sweden contributes to subsidizing student living costs, releasing its student population from the obligation to work to fund expenses, resulting in greater study time for Swedish students. Now let's go to France. Even though French students have the benefit of state-funded education, they nevertheless have to pay between $220 and $2,200 in tuition. There is an incentive to study when you consider the costs of university education in the United States and the lack of debt after graduation. The majority of French college students do not need to take out loans to pay for their tuition. As a result, many people have degrees from prestigious universities, and that's exceptionally great. For Germany, their university system is supported by the government. Hence, there are no tuition costs for the students. However, since living expenses aren't covered, much like in Sweden, France, and other countries, many German students must work to support themselves while in school. As you saw in your favorite Netflix TV shows, students work in restaurants or cafes after school hours. Make sense now? Lastly, we have Scotland. The Scottish Parliament abolished college tuition in Scotland in 2008. How nice of them. However, living expenditures must be considered, and the majority of college students in Scotland are in debt from government loans they took out to pay for living expenses while attending university. More nations provide free higher education. These are just a few of the nations that provide their college-bound citizens with free tuition. Other nations around the world such as Greece, Scotland, Denmark, and Argentina offer free higher education. Well, mark these countries, because there you get free education and you can pursue your passion for traveling too. Win-win situation. Well, that's it for today. We hope this video has been helpful to you. Are you looking for such student loans? Tell us in the comment box below. Also, subscribe to this channel to get more amazing content like this, and don't forget to activate bell notifications to stay updated with us. Thanks for watching, and I'll see you soon.